Hi, I'm Cody from Wall Street Breakdown, and we are continuing on with our series of the biggest financial news stories of 2017. We are now going to bring you number 4. That's right, the number 4 news story in all the financial world, as deemed by us, the professionals here at Wall Street Breakdown. Forget about Goldman Sachs or Forbes magazine. This is where the stories really hit the road. This is where everybody comes to get the real information. Forget about all the fun-loving iPhone nonsense or anything about Amazon. Those things are fantastic and all, but that's not where the industry really found its footing this year. Where the industry found their footing at number 4. Do you like smoking dope, bro? That's perfect, because in 2017, the idea of being a hippie and just getting blazed is no longer the way that we're looking at people who use marijuana. Marijuana is becoming more and more useful in the medical field. Up here in Canada especially, you can see that by the new ETF being traded down in the US as of the 26th of December. But up here in Canada, we have publicly traded companies in the medical marijuana field that have been doing well all through 2017. And we want to take a look at some of those companies, mention a few of the pitfalls that might be coming, unfortunately, in the future, maybe even the near future. But while we're at it, why not take a look at how some of these companies made their investors a basket full of money. That's right, green. That's what you were looking to make, and while you were at it, you were invested in the green that people were smoking, eating, or anything else that they happen to do with it. I'm not entirely sure. I'm Cody from Wall Street Breakdown. Let's take a look at the number 4 topic in our year in review series of what was the best financial year that I can remember in the marketplaces, despite some stories like these being highly speculative. Medical marijuana in Canada is a big story. It happens to be in the news on a regular basis. We have done multiple videos on it. This is going to be a nice breakdown of the industry as a whole. The major ETF trading up here on the TSX is the Horizons Marijuana Life Sciences Index ETF. Now, it started on April 4th of this year and obviously ran right till the year end, yesterday on Friday. Now, it launched on the 4th of April at about $10. Now, it found its way yesterday all the way up to just under $19. Now, these prices are in Canadian, mind you, but still very substantial growth, and a lot of the actual companies inside of this ETF found themselves growing at an even bigger rate individually than the ETF as a whole. Canopy Growth, that's the big company up here. They've got a market capitalization of $5.67 billion in Canadian rupees, or whatever it is that we actually use for currency up here. They started the year as well around $10 a share. They ended yesterday at $29.74. Now, again, I'm talking about a very speculative industry. So when we're talking about these companies, I do want to warn people that a lot of these companies are in debt, significant debt. They're not making earnings yet whatsoever, but there's been companies before. When you think about Amazon or Netflix, there's been tons of companies that have gone 5 years, 10 years without turning over positive EPS numbers. So that's not to say that there aren't positive EPS numbers on the horizon. Canopy, easily the number 1 company up here. The positive EPS could be coming in the future, but I want everyone to realize as of right now, while this news story might be number 4, it is also highly speculative. Canopy's EPS is around negative 11 cents a share. Not that great. Price to sales ratio, 77, right? That's really high. I mean, it's really high even for a growth industry That's my main concern, is even in the highest of growth industries, highest, no pun intended, price to sales at 77 has to have you a little bit concerned. But if you've been invested in the marijuana stocks already, you've probably made yourself a decent amount of money and found yourself a way to be convinced that this is going to find a way to kind of even itself out going forward. And I've got a couple of points later on why I think that it might do it, but also a lot of warning signs why it might not. So stay with me here. Some of the other big companies, Aurora, they find a market capitalization ending the year about $4.34 billion. They opened the year about $2.30. They find themselves at $9.60 to end the year. An EPS of -4 cents and a price to sales of 136. Now we know that Aurora is in the process of an unsolicited type of a takeover of CanniMed that they're trying to pursue. The Saskatchewan and Ontario governments have both in the last couple of days passed down some legislation that's helped both of these companies, and they've actually told Aurora that while they're not allowed to go through with all of the stuff they were trying to do, they are allowed to go out and buy some of CanniMed's shares on the open market, up to 5% of the common shares that are outstanding. As of yesterday, Aurora announced that they'd purchased just over 1% of the outstanding shares of CanniMed. So they're trying to hedge themselves in to this unsolicited takeover that CanniMed wants nothing to do with as best that they can. Now their original offer was a 3-to-1 price, or a stock exchange, 3 shares of Aurora for every share of CanniMed. Now, I'm not entirely sure. I think there's going to be a lot of consolidation in this industry. I think that just happens in any growing industry. We've seen it in tech. We see it all the time. Anytime an industry all of a sudden crops up out of nowhere, you have a whole bunch of small companies. They're all kind of touching in the marketplace a little bit here, a little bit there. They're trying to find ways to grow, and there ends up being some serious consolidation because a lot of these companies are built on speculation money and debt. And a lot of hype will drive you very, very high, but it's not going to end up getting you to where you want to go at the end of the day, which is being profitable in the long run, because eventually you're going to get out of that speculative territory and you're going to get into where institutional money wants to get involved on a real level. And as of right now, I think it's more retail trading than institutional money. If we're averaging it out, if you were to talk about, much more solidified companies, Exxon, Apple, Amazon, you name the company that's out there that's well entrenched in their marketplace, makes a lot of earnings, you're going to find that institutional money very, very safely invested in these companies, whereas in these type of companies that are over the counter or penny stocks or whatever you want to deem them as right now, they probably have a lot more retail money involved on a ratio basis, because it's still very, very speculative and people are a little bit apprehensive on the big banking scale to jump right in because these prices fluctuate just far too much, as you can see with Canopy and Aurora. One of the other big ones is Aphria. Aphria started the year at $5 a share, ended the year at $18.70. Again, if you were in Canopy, Aurora, Aphria, you find yourself making a very decent return this year in 2017. Will that carry forward to 2018? Only time will tell. I would encourage you to please be out there and do your due diligence. You know what's best for your type of investing. This is speculative, right? 5% possibly of your portfolio should maybe be allocated to any kind of speculative position. I don't want you out there putting all your money into this kind of stuff, not being diversified. That's a good way to find yourself blowing up an account. We don't want you doing that. We want you out there and to be able to trade through what is an outstanding marketplace in almost any sector right now. And I imagine going forward into 2018 with a great US economy, great Canadian economy, great world economy, we don't want you just having your money chasing a bunch of what is ostensibly greed. And this is kind of what this is, but it's also a burgeoning economy where people think that potentially this could take over and be something that takes hold almost all the way around the world, really, given what marketplace it tries to enter into and those people's moral opinions about marijuana being used in a medical capacity or any kind of just marijuana smoking recreationally or whatever it happens to be. Here in Canada, we're very liberal about this kind of stuff. So it's a good place to start here, but it could take hold in a much broader sense of the word. We're going to have to find out going forward. Don't put all your eggs in one basket is definitely what I'm trying to get to. Alfrey actually is in the positive for the EPS. They made 4 cents a share this year. That's not too bad, but still a price to sales of 100, very, very high, makes a company very, very speculative. I mean, when you consider that the price of the stock to the actual sales that they're making is that big of a difference, you're looking at being invested in something that it just isn't making the kind of money that justifies the share price right now. But it doesn't mean that you're not just getting in on the forefront of something that might find a way to turn itself around quite quickly if it can enter some other marketplaces or find some different revenue streams or find an exponential growth in Canada or abroad. Their market capitalization at Aphria is $2.84 billion. There's a lot of companies in this medical marijuana field that are worth a lot of money already. It's fairly comparable to our number 3 story, but I'm not going to get into that till we get to that video. Some of the other companies in the Horizons Marijuana Life Sciences Index up here in Canada are MedReleaf, GW Pharmaceuticals, the aforementioned CanniMed, and Scott's Miracle-Gro. I know you're thinking, Scott's Miracle-Gro, they're not selling drugs, are they now? No, they're not, but when you consider the amount of botanical use that Scott's Miracle-Gro is going to have, you know, botanists with their green thumb are going to go out and find the best product that they can use to keep costs cheap to get the marijuana to grow. And Scott's Miracle-Gro is a good way to diversify in some ways, because we know Scott's Miracle-Gro is out in a bunch of other industries that are already well established. So them adding themselves into this medical marijuana field and being one of the leaders in fertilizer, that's going to definitely help them, and it's going to help probably balance out this index a little bit if you get a pullback in some of the other companies, which I imagine if we've seen anything like Friday here that just passed, where there was a stoppage in trading because the prices fluctuated so much to the downside up here in Canada. You know, Scott's Miracle-Gro is a decent way to somewhat hedge that position, but I wouldn't really call it a hedge per se. Okay, so let's get into some of the reasons why this might be a little bit speculative, right? Okay, so there's a price to rev ratio that's even higher than when the tech bubble started. We're talking price to revenues north of 50 on probably and almost every one of these companies. That is far too high. I don't know if you remember the tech bubble of the late 90s, early 2000s. A price to revenue ratio of 50 and above is significant. That is going to take these companies a long time and some serious exponential growth to rectify that number, to bring it back down to investment grade type of actual stock. I'm not entirely sure if they're going to be able to do that. To be honest with you, I find a lot of these stocks ridiculously overvalued even at this point. But for me to say that, I can't tell the future. I don't have a crystal ball here on the table. I'm not a savant. I don't know exactly the way things are going to shape up. So you never know. Things might end up working out to their favor and they might be able to bring that number down. But as of right now, that is a number that makes me very leery, much like the price to sales. The negative EPS is, again, not something that really bothers me too much. Beginning of an industry, that tends to happen. Price to, or EPS numbers being in the negative, you see that all the time. But price to sales, price to revenue being that out of whack makes me a little bit trepidatious. Potential outside investments. I mean, okay, let's first off think, Canada isn't really the type of economy a lot of the time that allows companies from the outside to come in, right? We see that in banking. It's very regulated up here. We do have banks, international banks that are up here. They're not like the big five. They're definitely highly regulated with their limits that they're allowed to grow and the amount of money that they're allowed to bring in here in comparison to our TDs, Royal Banks, and all that. Same thing in things like the telecom industry. So you might see Canada regulate this on a much more heavy level because they're trying to build an industry that they can consider a Canadian industry, But then you wonder if they don't allow in the Altrias, the Philip Morrises, the Anheuser-Busch InBevs, Brown-Forman, Sam Adams, all the liquor and tobacco companies that already deal in all the logistics and legalities of selling items to non-minors that have a lot of money that could come in and get invested. Will that allow Canada to then go into these other marketplaces, because other countries might put up some walls to entry and say like, hey, you're not allowing us to come into your country and be invested. Why are we going to allow your companies from your country to come into our country and expand? So the idea that outside investment may come in and may come in debt-free is very possible. So you could have a lot of companies that have these infrastructures already set up, maybe not the exact infrastructure to grow marijuana, but infrastructure to grow tobacco, the distribution chains, all that kind of stuff. And like I said, the logistics to deal with selling things to, adults, not minors. A lot of that stuff could be covered much easier by a lot of these companies that also have the capital to get involved in it. It's really going to come down to how Canada decides to allow these companies, or if they decide to allow these companies to get into this marketplace at all. Now, another thing that we're wondering is, as this market starts to take off and maybe finds a little more common ground and less shaky ground where the growth is just out of control, institutional money is going to want to get involved. You know that. There's a lot of institutional money, hedge fund money, pension plan money. There's money out there that wants to come in and find every kind of dollar and penny that they possibly can. So why wouldn't they come into a marketplace like this? Again, it's going to really be hedged on what Canada decides to do and how they allow outside investors to come in. I would imagine that Canada's going to do that. They've done it on a small level. We know Constellation Brands, that owns Corona and makes a bunch of other liquors, have come in and made, I believe it was a 9.9% purchase of Canopy back in October. But to see bigger purchases where they take controlling share might be a different story going forward. We're just going to have to see how that plays out. I talked about it earlier, mass market consolidation is going to happen, and it's going to probably happen at a relatively fast rate as this industry finds a lot of companies maybe spinning their tires and not really able to get the traction that they were hoping to. We've seen a lot of companies picking up architecture firms, buying up greenhouses, buying up all sorts of medical application companies. We could see that again going forward as well as these companies try to consolidate, and we have a couple powerhouse companies as opposed to what right now is a marketplace full of companies. It's an industry that's built on debt and hype. If you go on the internet and you read any kind of forums, you look at people trading in what is ostensibly, again, penny stocks, very, very cheap investments to get into this and cryptocurrency. We're not mentioning that yet. They're the ones that are definitely involved. It's a lot of hype. You see share prices go up like this. People want to get in, and unfortunately, when greed's involved and it's retail investors more than institutional investors, prices can get driven up very, very easily. We seen yesterday with companies like Aurora, volume trading was up, 4 times what the average volume is. And when that happens, you get a lot of people at the top end that have been in from the bottom start taking their money out. Prices then come back down. Then other retail investors see it as a point of entry. They start trying to drive the price back up. And we get into this kind of negative feedback loop where it's just retail money cycling through, and people end up, the people on the back end, the last resort of investors, end up sometimes being at a loss as we watch price corrections normally take effect. So let's just be concerned about that, right? Licensing. We don't know how many of these medical marijuana licenses are actually going to be available. Right now, there's a number that's out there. We've heard the number before. The number's in the 20s or 30s. We've also heard that the number could grow at an exorbitant rate. There might not be an end to what this number is. Again, you let outside investors in, institutional investors, other companies have got infrastructure set up that aren't holding a bunch of debt, or if they are holding debt, they can definitely go out and raise capital if they needed to get involved here. Again, we talk big tobacco, Altria, Philip Morris. You talk about big alcohol, Anheuser-Busch, InBev. You talk about Brown-Forman. We've already seen Constellation Brands, Samuel Adams. We've heard rumors of all these companies potentially getting involved. If licenses become a lot more prevalent to get your hands on, and the Canadian government wants to let outside money in, a lot of these companies that are around now could get bought up, which might be good for the investor, especially if they get paid at the price that they're trading at the time or at a premium. But I would imagine as you start to see other companies saying they're going to get involved, these companies that are way overvalued are going to take immediate share price downturns. That's just the way I see it. I'm not saying it's going to happen, but I definitely recommend you do your due diligence. You speak to your licensed professional financial advisor. Don't, again, no more than 5% of the portfolio, please. This is not the way to make $1 million. Don't go out there and start risking it all to try to make this happen as the only thing you've got happening in your portfolio. There are far too many good investments out there. Let's make sure that we're doing our due diligence properly and we're properly diversifying all of our investments. You guys are smart investors. You already know that. Like we were talking about, the Canadian government might box out a lot of people that are trying to come in. I mean, we've covered that. The potential for this is the thing. This is probably the thing that I would like to think that could happen. As a Canadian that really looks at my Canadian economy, we are not diversified across industries, right? We've got a lot of oil and gas. We've got a lot of good, strong financials. We don't do a lot of anything else on a major world scale. Sure, we've got some really good individual companies that do some stuff, SNC-Lavalin. There are really good companies up here in Canada, but the issue is the growth across the world. If we have other countries starting to open up their borders and allow, whether it's just medical marijuana or in what we're going to end up doing here in Canada this summer of 2018, and what they're going to be doing at the start of the new year in 2018 in California, which is the outright legalization of marijuana, these companies could potentially be the world leader companies. They've got a very, very strong head start. You could see them becoming the world leaders of distribution and growth, potentially across the entire world. Again, I use the word potentially. This is not me making any type of assumption that that's going to happen, but it could happen, and we definitely have a head start in that as a Canadian who wants to be invested in my own economy. As much as I like being invested internationally, I mean, I'm going to take the best investments available. This could definitely be a coup for Canada and Canadian investors, because this could add a lot of jobs, could add a lot of GDP. It could really, really assist what is a very strong growing economy in Canada. Let's hope, fingers crossed, that some of these companies are able to transition to a much more international scale. As of right now, that is not on the table. Like I said, we've got there's an ETF trading in the US as of Boxing Day, but that ETF still encompasses all these Canadian companies. We are nowhere near the number that we want to get to internationally. There's no money internationally really invested in this. At this point, it's very much retail, minor amounts of investments here, there institutionally. It is not anywhere near the type of growth that it could be. Now, looking at legalization, we are going to have legalization here in 2018 in Canada. They're going to have legalization in California here in just a couple of days. But the legalization in California is a state-authorized legalization. Federally, which is what we're going to have for legalization up here, federally, marijuana is still a scheduled drug. And with a Republican government involved, the DEA could come in and shut down any type of grow-op or marijuana store, dispensary, whatever you want to call it, at any point in time. And a Republican government a lot more strict about things than the Democrats are in that sense of the word. Now, I'm not saying it's going to happen. In fact, it's probably relatively unlikely. We haven't heard Donald Trump or his administration come out and talk really at all about that being a potential. But let's just remember that that's still on the board. So for states like Colorado, Washington, California that do have legalization or medical marijuana licenses in their states right now, that is not a federal law, and things could definitely change. You never know how leading up to legalization here in Canada, if our political adversaries in the United States, and I don't think our liberal government gets along as well as we'd like to believe with the Republican government down there, you could find the Republicans starting to push back quite a bit on the fact that a scheduled drug is going to be available right across their border. They've got enough problems with drugs coming in from the south of their borders. When you're talking about the north of their borders as well, there could be quite a bit of blowback from the federal government in the United States, potentially. Not saying it's going to happen, but let's just remember, all things being equal, you never know how things are going to play out. I would say that the medical marijuana industry as a whole is very speculative. It's been on a heck of a tear. 2017, if you've been invested in this, you have been able to basically sit idly by, baked out of your tree, and make money being invested in something that you probably really don't know a whole lot about, other than the fact that the price keeps going up day over day over day, and the hype on the television or on the whatever Facebook group you belong to or any kind of other media, Twitter, anything, seems to get quite a bit of play. But it gets quite a bit of play because A, the growth, and B, the cheap price to entry. And on top of that, you know, the idea of legalization of more party ancillaries, you know, that makes people, I guess, kind of happy. They really want to be involved in the idea that they can go out and get more distracted. Being distracted is not a good way to be invested in anything. I definitely don't want people being trapped under the ether and not doing their due diligence. But for number 4, this is still a very big story for 2017. I can't deny it. There's no way. And the growth in this industry is going to be there. It's going to be there in one way or another. Do I think these companies specifically that are quite overvalued and leveraged on debt at the moment are going to be the companies that end up coming out of the ashes like the Phoenix? I'm not entirely sure if that's going to end up happening, but it might. You're going to have to stay tuned through 2018 and properly watch your portfolio in case any of these companies or the industry as a whole start to take some sort of a downturn or a turn that we couldn't foresee coming. I'm Cody from Wall Street Breakdown. The marijuana industry was the number 4 topic in our 2017 year in review for the financial news. I thank you for joining us. While you've got a chance to digest all this information, click a like for this video, subscribe, notification bell, and leave us some comments. We love hearing from you. We hope you had an outstanding holiday season, and we look forward to an even more prosperous 2018 in the markets. You guys have yourselves an outstanding rest of your day.